Hello learners, and welcome to today's lesson. In this lesson guys, we're going to do fixed asset note, also known as the PPE note. And then as well guys, we're going to complete the asset disposal account. So on your side, you definitely need to make sure that you watch this recording up until the end. So let's get started. So here's the question guys. Question 1. We're expected to complete the accounting equation and fixed assets, but I've already uploaded another recording where I do part 1 of this recording where I complete the accounting equation. So on your side, you definitely need to check my profile and then you check the description. I am going to attach the link for that accounting equation example. So let's continue. Here 1.1 is the accounting equation. On our side, we're not interested in that. We're going to go to 1.2. 1.2, we're given Lulu Traders. Lulu Traders, the name of the business. So the following information relates to the financial year ended 30 June 2022. So it is very important, guys, in accounting to always note the year end. So if the year end is on the 30th of June 2022, it means now our accounting period started from when? 1st July 2021. So what are we required to do? We're required to calculate the missing figures denoted by I up until when? The last Roman figure there. So on the fixed asset note. So what I will do on my side, I will complete this fixed asset note. And also guys, I know that we're not required to do the asset disposal account, but I will assist you. I will make sure that we do the asset disposal account as well. So information is given. We have A, the fixed asset note. So what is the first missing figure here? First missing figure, we go to land and buildings. We have the cost price at the beginning of the year. We have the carrying value at the beginning of the year. Remember, land and buildings, they don't depreciate. Okay, so what do we have on movements? We have additions at how much? 360,000. So what are we required to do, guys? To calculate the cost price at the end of the year. So this one is very simple. We are going to take the cost price at the beginning of the year of 3 million plus the 360,000. So also given the space there where we're going to write solutions. Comment figure number 1, cost price at the beginning of the year, 3 million plus 360,000. Then you get 3,760,000, the cost price of land and buildings at the end of the year. So let's proceed. What else do we want? Comment figure number 2, equipment. We want the carrying value at the beginning of the year. What we have the cost price of 420 at the beginning of the year, and also the accumulated depreciation at the beginning of the year is given. How much is it? Is 160. So to calculate the carrying value, guys, it will be the cost price 420 minus accumulated depreciation at the beginning of the year of 160,000. Then you will get the cost price of 260,000. All right. Hope we're still together. Roman figure number 3. We're still on equipment. We want the depreciation for the year. So as you can see with equipment, guys, let's check. Here's the cost price at the beginning of the year. Movements, we have additions, which means an equipment was bought during the year. It was how much? 160. Now we want the depreciation for the year. Depreciation for the year, since we have additions and also old, this is what we need to do. On our side, Roman figure number 3, we're going to have old and also new. So let's firstly check how do we depreciate equipment. Information B. Depreciation on equipment is calculated at 10% per annum on the diminishing balance method. The diminishing balance method, guys, it is also known as the carrying value method. Why? Because when we use this method, we depreciate our assets at carrying value. So this is what we need to do. We're going to start with old. old, we have the cost price, we did minus the accumulated depreciation, and we actually calculated the carrying value on Roman figure number 2. Here is the carrying value. We already calculated it. So it's going to take that 260,000. You multiply by the percentage, it's 10%. Then you multiply by 10%, multiply by 12 over 12. Then you will have the depreciation on the old equipment. New, just take the cost price only. How much is the cost price? 160. Are we going to minus any accumulated depreciation since we're using the carrying value method? No, because this equipment was bought this year. We don't have any previous depreciations. So you just multiply by 10 and then you multiply by 12 over 12. Okay, so we're not minusing any accumulated depreciation on the new equipment. So we calculate there, guys. Okay, so before calculating, guys, we almost forgot something very important. We need to check dates. When did we actually buy this new equipment? So please, we almost did a very terrible mistake there. So I told that the new equipment was purchased on 1st October 2021. So it means now we had this equipment from 1st October 2021 up until the year end. Remember, the year end is on the 30th of June 2022. So you're going to count from 1st October up until the 30th of June 2022. So it is October, November, December, Jan, Feb, March, April, May, June. So it is how many months? 9. We multiply by 9 over 12. Then we're going to have depreciation on this new equipment of how much? It is 12,000. The old equipment, guys, the depreciation, it is 26,000. So you just add those two figures, 26,000 plus 12,000. Then you will have the depreciation for the year of how much? 38,000. 38,000. All right. So please, on your side, guys, don't try to write only 38,000. Where here? Throw all the calculations here. Are we clear? So let's continue. The last question. The last part of that question, guys. Remember, we're going to also do the asset disposal account here. On vehicles, what's happening? Vehicles, we have the cost price at the end of the year, accumulated depreciation, the carrying value. But on vehicles, we need to calculate the disposal at carrying value. Disposal at carrying value. So which means what transpired? A vehicle was disposed. We sold a vehicle. So what happened? Here is information DB. Depreciation on vehicles is calculated at 15% per annum on cost. 15 per annum on cost. So this is what we need to do, guys. A delivery vehicle was sold for how much? 112,000 cash. When? This took place on the 1st of March 2022. It's very important to note that date. We sold this delivery vehicle where 1st March 2022. So the cost price, it was how much? 360. The accumulated depreciation on 1st July, the first day, it amounted to how much? It amounted to 216,000. Are we clear? Remember, guys, how do we depreciate vehicles on cost? We dispose a vehicle and then we received how much? 112,000 cash. When? 1st March 2022. How much is the cost price? 360,000. At the beginning of the year, what do we have? We have the accumulated depreciation of 216,000. So it is very important to analyze the information. You analyze your givens. So this is what we need to do now, since we're calculating the disposal at carrying value. Carrying value, guys, we need to find the cost price. Cost price is given. You go and write the cost price. It is 360,000. minus, we need to minus the accumulated depreciation on the day of sale. Do we have it? No, we only have the accumulated at the beginning of the year. So we can just depreciate our asset. Here, the cost price 360,000, then you'll multiply by 15%. So when did we dispose this asset? 1st March. Guys, we're using the cost price because we're told that depreciate vehicles on cost. So we dispose it when? 1st March 2022. So you're going to count from the beginning of the year, which is 1st July 2021 up until the 1st of March, not including March, because we sold this vehicle on the 1st day of March. So you're going to count July, August, September, October, November, December, Jan, Feb. 8 months. You go and multiply by 8 over 12, and then you are going to have the depreciation for the year, which is 3,600. So the depreciation for the year of 3,600 plus the accumulated that was given at the beginning of the year 216 plus 216,000, then you will have the accumulated on the day of sale, which is 219,600. You go and minus here 219,600, and then you minus there, and then you'll find the carrying value on the day of sale. So cost price 360, then you minus the accumulated, you will have the carrying value of how much? Guys, I've made a mistake again here. The depreciation, it was supposed to be how much? 36,000, not 3,600. So I forgot 10. So please, on your side, please check as well. So it was supposed to be 36,000, the depreciation plus the accumulated that we have at the beginning. Then you will have the accumulated on the day of sale, which is 252,000. You go on minus 252,000 here. So you see, in accounting, once you forget 10, the whole thing that you are doing is going to be incorrect. Even if, guys, you are working for a bank, you forget 10, hey, something very serious will happen. So this is what will happen. We'll have the carrying value on the day of sale disposal of 108,000. Okay, remember what we're calculating here. We're calculating the disposal at carrying value. So we dispose our on the fixed asset note, we record the disposal at carrying value. Right, so I hope you did understand that. So let's proceed, guys. Even though we're not required to complete the asset disposal account, I just want to add the asset disposal account. Before doing that, guys, please note that I offer online classes. You can take my number, and then I charge 100 rands per month, which means now you're going to attend 4 online classes, and then you're going to attend for 2 hours weekly. So if you're doing grade 10, you're going to attend on Tuesday. Grade 11, Wednesday, grade 12, they attend on Thursday. Then if you're doing your first year in accounting, you attend on Monday. What time? 6 to 8. All the classes after school, 6 to 8. And then, guys, hopefully you're going to contact me. Thank you so much. So let's proceed. Asset disposal. You need to ask yourself, what do I have on the debit side? What do I have on the credit side? On the debit side, you need to have the cost price of the asset that you are disposing. Always. Here, what are we disposing? A vehicle. So you're going to write the cost price of the vehicle. Okay, the cost price, it was given there. It was how much? 360,000, if you can remember. On the credit side, what do we record? You record accumulated depreciation. Which accumulated depreciation? The one on the day of sale, accumulated depreciation on the day of sale, which we already calculated. But what else do we credit? We credit the amount that we have received for that asset that we were selling. So we're going to credit bank here, because this is what happened, guys. It will make all sense here. The cost price is given, already calculated, recorded the cost price of 360,000. So a delivery vehicle was sold for 112,000 cash. That is the amount that we received. Then you go and credit that amount, 112,000. The accumulated depreciation, we already calculated it. Where is it? Here. Here is the accumulated depreciation on the day of sale, which is 252,000. You go and record it there, 252,000. Let me borrow more space there. 252,000. 252,000. So on your side, this is what you need to do, guys. You need to add these two amounts, the accumulated depreciation and the amount that you have received. And then after that, what do? You need to check which side is the bigger side. You're adding whatever that you have on the credit side. So after adding on my side, I'm getting 364. Let me write it there. Let me write it where you can see 364, the credit side. I've added those two amounts. So check, you have 364, you have 360 on the debit side, the cost price. Which side is the bigger side? So obviously is the credit side. So you're going to balance our account with the credit side, 364,000, 364,000. So what will happen here, guys? If the debit side, sorry, if the credit side is bigger, such as in our example, then we'll have a profit on sale of assets. So what are you going to do? You take this 364 minus 360, then you'll get a profit of 4,000. But if the debit side, namely the cost price side, was bigger than the credit side, it means now, guys, you're going to have the 360 as the balancing, the closing off here. So you're going to have a loss on the credit side, loss on sale. You're going to write loss on sale of asset, and then you write, where do you write that loss? Here. Okay, so hopefully, guys, this video was very helpful for you to you. So likewise, please make sure that you like, you share, you subscribe. That will definitely help me to create more videos that will assist you. So if you want this question paper, just comment paper. But if I've uploaded this video on TikTok, you can check my TikTok profile. I've uploaded that question paper. On YouTube, just comment paper, then I will definitely upload this video. Thank you, guys. All the best.